globally we've seen companies focused on the consumer and his or her spending power to boost their bottom lines. With that focus on consumers within growing economies, within African economies specifically, very broad-based, what are we looking at when we look at the African consumer right now?
Good morning. Well, when we're looking at African consumer now, you see the consumer base growing very, very fast. You'll be aware that Africa has got over 900 million consumers, precisely about 955 million consumers, and they are looking to be growing to 2 billion by the year 2050. And not only are they growing in numbers, but you also see that they're growing in terms of the spend. From about 2 years ago, the basic spend of consumers of the total GDP has been about 60%, meaning that for 2008, you've got about 860 million being used by consumers. So it's a growing base. Very, very poor people, but very many people.
Well, that's the average scenario that we've just laid out here, but we well know that there's quite a disparity in African countries between rich and poor, urban versus rural. So let's look at how that factor skews the picture in terms of spending power that these fast-moving consumer goods companies are actually looking to tap.
Okay, yes, there are huge disparities between the very rich and the very poor. In most of the economies, you'd find that over 75% of the people form the bottom of the pyramid, which means they are basically in what we refer to as social classes D and E, and this is living on probably about $1.50 to $2 a day. But nevertheless, they have got an aspiration for brands, and they have begun consuming large manufacturer company brands, and you'd see that in some cases they're even going for the premium brands. For instance, if you're looking at West Africa against East Africa, you'd see that there's a higher adoption of premium brands that could be from cigarette right through to milk. So yes, they earn on average lower money compared to other markets, but their aspiration drives them to achieve and to get to buy what they have always yearned to buy.
Well, with that being the case, I mean, of course, it's spelling opportunity for retailers, and we've got South African retailers amongst those wanting to enhance their African footprint. How is that changing the competitive landscape for players within this space specifically?
Yeah, the competitive landscape is changing because up until a few years back, the focus has predominantly been in South Africa and North Africa, and just a few tiny bits in Nigeria and Kenya. But now it is, because of the newfound consumer, it is companies that are able to go deeper into those regions and understand the consumers better, understand their triggers better, do their marketing communications and planning around these core needs that are succeeding. So it's basically like discovering what was not there before.
Well, as they begin to grow their understanding, I mean, we're seeing quite divergent views out there in terms of where money is looking to be made. And I'm going to use South Africa's Pick n Pay as a case in point here, where it's just increased its stake in TM supermarkets over in Zimbabwe. At the same time, we've had a player like Massmart looking to pull out of Zimbabwe. So are retailers pretty selective of the territories they're going into? Because it's not just, you know, broad sweeping, we're heading into Africa, and that's the bottom line.
Okay, when you're looking at African markets, risk is one thing you have to live with. The availability of a market is without question. There are big consumers, and these consumers are spending, as I've just spoken about a few minutes ago. So it's not a question of the consumer being there or not being there, but it's just a factor of how much risk are you willing to take. When you're looking at the TM stores, TM is the largest chain store in Zimbabwe, and it has a lot of opportunities to whoever will be part of it, because Zimbabwe is one market which we're also seeing is going to have rapid growth. But it's just about, are you willing to go up for that risk, for that return that you're going to get?
Yeah, that not the only risk to consider. I mean, you highlighted earlier that African consumers are very brand conscious on a large scale, but also 70% of that consumer base sits at the bottom of the pyramid, earning anything between $1.50 and $2 a day. And with that, becoming more and more pronounced is the informal sector. I mean, what kind of a challenge does a business in the informal sector present for those in the private sector?
It's about understanding how the playing field for the bottom of the pyramid consumer works. Understanding where they buy, how they buy, what are their influences, understanding the importance of the shopkeeper in the buying, understanding the yearning for credit. Basically realizing that these people don't normally earn their money per month as the majority of us would do. But they're earning their money every hour, every day, and therefore the purchases that they're looking at making are those that they can be met by the money that they earn on a daily rate. So given that, it's totally changing your understanding of marketing, how you do your displays, how you do your communications, and everything, because it's a totally different realm.
And that there is a very strong need to adjust your model to service the African consumer.